Thank you, Dan. I know this is a busy week coming off of Thanksgiving, and also with this being filing period, and a lot of people are doing stories on that. We've had a very active month in the Treasurer's Office, as you can imagine. Uh, we are reminded in this holiday season that we're in the check delivery business, and as we go into the through Thanksgiving and as we approach Christmas and New Year's, we are thankful that we are keepers of the public purse of one of the most secure pension plans in the United States, and that we approach everything we do at the Treasurer's Office with a high degree of certainty because behind our participants, behind their health and their faith and their families, in many cases, the two most important things in their life are the safety and security and sustainability of not only the state and local pension plan, but also the state health plan. So with that, I'll see if anybody has any questions.
Gentleman on the call that wants to ask a question.
Well, I appreciate staff setting this up. I'm sure that,
Oh,
I'm sorry. Hey, Rose.
hi. This is Julie. Sorry, calling. I was wondering if anyone else is on the call.
Well, here's the only one, Julie.
Sounds good. Sorry, I thought there would be someone else. Yeah, I was hoping, would you mind sort of telling me a little bit about that pension plan and how we compare nationally? You mentioned we were one of the most secure. Would you mind sort of diving into that a little bit for me?
Sure. Thank you for joining us, Julie. We put out a press release last week that talked about the Pew Research uh, stress testing our pension plan.
Yes.
And we invited Pew to come in and do this. And we do this, we love to have our partnership with Pew Research. We love any opportunity that we can take to get an objective source to look at everything we're doing, whether it's auditors or organizations like Pew. And basically, the Pew test was a measure in an economic decline. What is our ability to remain in the check delivering business? What that means to your readers, Julie, is that every 30 days, we're sending out over $520 million just in pension benefits to over 320,000 participants. In many counties of North Carolina, the pension check is one of the largest parts of the economy because of the sheer number of people who who live in some of these counties. So what the Pew Research did, Julie, is it just basically looked at in an economic period that is more stressful than the one we're in now. And to put this in context, the economic period we're in now is stock market at all-time highs, interest rates at all-time lows, and unemployment at all-time lows. So what the stress test does is it looks at if those variables were to change dramatically, what would North Carolina's check delivering ability be? And so we were very pleased that we came out in the top handful of states in the country. And I would say that I haven't looked at all the detail, but there are probably some states that are ahead of us in terms of being able to sustain an economic downtrend. But I dare say that there are many that are as large as we are. And that's a very big difference here. So we're very pleased about that. And also in that press release, Julie, and I'll expand on this if you'd like for me to, is Moody's confirmed us as number one in the country as far as the ability to fund the plan. And the funding of the plan comes from two sources. The General Assembly's appropriation and the appropriation of city and county and local governments, and then the 6% piece that comes out of the hip pocket of the state employees.
Yeah. No, I was reading your press release. It's certainly a change. I came from Missouri, right? So our neighbor is Illinois. Their pension system is sort of a dumpster fire comparatively.
Yeah. Well, we're right behind Illinois in terms of the state health plans insolvency, which is not what you asked about, but you've written on that a lot, and that's why we continue to push for clear pricing and get rid of secret contracts in healthcare. And since our last call, there's been more news out of Washington, out of the White House about their approach and how they're going to attack transparency and secret billing. And so there'll be obviously more to come about the state health plan, but the pension plan is one of the best.
Mm-hmm.
But the
I was reading that news. I thought you would be tickled.
Yeah, I apologize. I interrupted you. The Moody's report is, I think, linked in that press release where you can actually pull up the Moody's report, and it's like a lot of things in life. 50 is the best. 1 is the worst in that particular ranking.
Mm-hmm. Yeah, perfect. So where was the pension plan at when you moved to the state? Sort of how have you improved things? Sort of how have things changed over your tenure?
Well, a lot of things have changed as we've tried to simplify what goes on with the investments. The biggest thing that has changed is obviously the economy. The reason the plan has not earned its assumed rate of return on average for the last 21 years is it's not emotional or political, it's mathematical. When Treasurer Moore was elected, soon after he was sworn in, our country was attacked. The stock market was closed for several days after 9/11. Stocks fell dramatically. And if you look at a chart, from almost the time that Treasurer Moore became the treasurer, he worked during that whole 8-year period of time to get the pension plan back up to near where it was when he inherited it. We inherited it from Treasurer Harlan Bowles. The plan was 110% funded, and what that means, Julie, is it had every dollar it needed and 10 cents on top of that. And then we were hit with 9/11, and then at the end of Treasurer Moore's tenure and the beginning of my predecessor's tenure, we were hit with a recession of '08, and the plan lost tens and tens of billions of dollars. Not millions, billions. And the fundedness of the plan fell dramatically. Now the value of the plan's up all-time highs. It's over $103 billion. So the biggest thing that has changed since I've been the treasurer are things that are really outside of the control of any treasurer, and that is economic confidence, stock market values, and the price of money, which is translated into what people commonly think of as interest rates.
Mm-hmm. Yeah, actually, I was hoping to talk a little bit about those interest rates. Near the bottom of the press release, you mentioned some of the challenges of historically low interest rates. I'm assuming you're talking about the Fed's action to suppress those interest rates.
Well, what I was talking about is that, and I definitely want to be clear about this on the record, is that low interest rates are fantastic for buying businesses, for buying cars, for buying houses, for lots of things that have to do with the price of money and credit. Low interest rates are fantastic for all of those things. But as you've seen now in The Economist and several other international publications, low interest rates are having a very large detrimental impact on the on pension plans, because, like in our case of having one of the more conservatively managed pension plans in the United States, about 35% of the money we have invested is in things that only earn interest. And so, so now you're getting the point. So when interest rates were at 10%, and your hurdle was 7.5%, it was real easy to be the treasurer, because you could just put the money in treasury bonds and be able to jump over your hurdle, and everything was great. but and we can provide you this chart of what's happening in the last 50 years in terms of interest rates and the fundedness of the plan. And you can see where low interest rates are really good for families and for businesses and for everyday living, but they are really having a harmful impact on the fundedness of these pension plans because so much of the money is sitting in things that simply earn interest.
Yep, that makes sense. I thought that would be a problem. It's not surprising because that it is. Sort of what about the unrealistic investment returns bit?
Well, it's a very, it's not a simple answer. It's not.
Fine by me.
Actually, no, I should have said that differently. It's not an easy answer. It's a simple answer. We would love to be able to lower the assumed rate of return to what we feel like is a more realistic rate going forward. As a matter of fact, it used to be dramatically lower back before in the 30 years ago. That's the simple part. The hard part about that is that every time that we lower that assumed rate of return by 5 basis points, that's 0.05%. So right now it's at 7. So let's say that we were going to take it to 6.95, not 6.5, 6.95.
Mm-hmm.
Every time we lower it 5 basis points, it requires tens and tens and tens of millions of more dollar appropriation from not just the General Assembly for the state pension plan, but also from all the county and city governments through the local government plan who have no other way of raising that money to pay us that except through increased property taxes. And that becomes extremely difficult, especially in some parts of North Carolina that are depopulating. So then you're raising property taxes on people, on communities while they're losing population. That's not exactly, the trend that you want to establish. So when I was sworn in as the state treasurer, the assumed rate of return had not been lowered in, I think, over 2 decades, this century basically. So we lowered it initially to 7.2, and then we lowered it to 7%. So we've made some dramatic moves. But the thing that I'd like to be absolutely clear about is this. You can look at our trade magazines, for example, like Pension Investments. You can scroll the internet and you can find these states who are lowering their assumed rate of return to 5.5%, for example. That's fantastic, except they're not funding it. It would be, I could recommend the Board of Trustees lower ours to 5.5% tomorrow. But you cannot do that unless you're working in conjunction with the appropriators of the state budget, Office of State Management Budget, the County Commissioner Association, the City Council, League of Municipalities. That's why just lowering it and not funding it is what I call activity. It's not accomplishing anything. The other thing I would add, which is that the rating agencies, when they score us on the rating agency side and to determine whether we continue to earn the AAA bond rating, they do not use our assumed rate of return. They don't use the assumed rate of return of any state, actually. They use a much lower assumed rate of return. So when they give us our rating, they've already, quote, stress tested our portfolio to a more realistic rate, which is exactly the center of your question.
Yeah, makes sense. Interesting. So going back to sort of wanting to lower that and some of the difficulties with the sort of suppressed interest rates with the Fed, how are you working around the low interest?
We're working around it by having a focus on what investments bring the highest amount of value to our participants and the with a risk that is appropriate. So we are totally concentrated on only doing those investments that have a high rate of or high rate of return, but we're not swinging for the fences like a lot of other pension plans are having to do because their funded levels are so low. They have really no choice but to swing for the fences.
Interesting. Okay. Sorry, just catching up. Yeah. No, to me it seems a small miracle that this plan is funded, having been the neighbor to Illinois for so many years. Mm-hmm. Oh, God. No, you're doing so lot better. So, highs and lows. What about the state?
Now, let me just add to this that, and you need to check me on this, but the South Carolina pension, I mean, just take states near us. The South Carolina pension plan, I think, is 56% funded today. One of the Kentucky retirement systems is 30% funded today. Our plan is nearly 90% funded. So when I use the term swing for the fences, it's because some of these other states have to do that in order to continue to be in the check delivering business and meet their obligations. I'm sorry I interrupted you.
Yeah. No, you're good. That was helpful. I had heard that Kentucky was also a bit of a mess. And sort of highs and lows, where is the state health plan at now with its, I guess, funding situation and sort of what's in the future for that looking forward?
Well, the why of why we did clear pricing is more important and more front and center than it's ever been. And the why is simply this. Our costs are going up faster than the money that's being appropriated to us. So what clear pricing was the how. If you're spending more money than you're taking in, then you got to focus on how you're going to solve the problem. And in this divisive world right now, people don't really care. All they care about is how are you going to solve the problem? And what we're trying to do to solve the problem, our answer is to get rid of secret contracts, to push the power down to the consumer so they can consume like they do in every other aspect of their life. And we are very confident that by doing that, we're going to be able to lower healthcare costs and therefore be more easily able to live within our budget.
Mm-hmm. Interesting. Okay. And is it still the same timeline for when the pension's going to run sort of into hot water? Has anything changed with that?
Pension or health plan?
Oh, sorry, health plan. Sorry, I was looking at my notes and I said pension.
Yeah, the water's not even tepid in the pension plan. That really hasn't changed. We're still looking at the exact same timeline, but we just don't need to not lose money in the pension plan. We need to start building reserves because we have a $32 billion unfunded liability, and because for 40 years there's been nothing really put aside for the liability of health care for retirees. So none of those numbers have really changed.
Yep, they're still nice and large. Yikes. Okay, so still looking at a similar, are you planning to pursue clear pricing next year still?
Oh yes, and actually if you wanted to, you could go to our website, nctreasurer.com. You can click on the state health plan, and you can actually see a list of all the providers that are in the clear pricing project, nearly 25,000 of them. And that'd be a great different story than the pension, but so when I say get rid of secret contracts and push the power out to consumer, now you have something that you can go to your computer and look at, Julie, and your viewers can, where we have now our first example of pushing the power down to the consumer so they can see which doctors are in the clear pricing network.
Yeah. Any new ideas with how to handle the hospitals?
The hospitals continue to boycott the state health plan, even after being offered nearly 100% profit, and exhibiting cartel-like activities. And I just remind you, for legal purposes, that cartel in the Webster's Dictionary is defined as an association that is formed to restrict competition or raise prices. I see nothing but further consolidation and moves to consolidate healthcare in North Carolina, which is going to result in less accessible healthcare, lower quality healthcare, and higher cost healthcare. The Clear Pricing Project and what we're doing at the State Treasurer's Office is the antithesis, is the exact opposite of all those things. We want accessible, independent, high quality, low cost health care for our providers, and that's why we have no choice. Going back to the why for a moment, we have no choice but to continue pursuing this.
Yeah. Speaking of, you mentioned earlier that you were considering some antitrust moves. Has there been any progress with that?
We're still looking at that, and obviously we're looking at it in relation to all the news that's coming out about every three weeks out of the White House and out of Washington, D.C. regarding these issues. And it's not just antitrust, it's steerage, it's surprise billing, out-of-network billing, split billing, and probably things we haven't even thought of yet that are going on in healthcare. So we can continue to pursue those avenues, but all we're trying to do is fix the problem. And as stilted as this may sound to you, guess what happens the day after we increase transparency and lower healthcare costs? The next day, we just got to go on to the next problem. That's what our jobs are as keepers of the public purse. This is the 26th largest pool of public money in the world, and every time that we solve a problem, no matter how big or large or small it is, what we have to do the next day is go tackle another one, and that's what we'll do after. And the next area, obviously, we will be tackling is prescription drug costs.
Yep. Very restful job. All right, perfect. Is there anything you think we did not cover that you'd like to add?
Hang on just a minute, Julie.
Sure thing.
It's like one-handed here. So, no, I mean, we appreciate the interest that you show in these subjects, and as you've so ably reported on the past, on the pension side, we're talking about over 1 out of 10 adult North Carolinians who are on the pension plan. On the health plan, it's one of the largest. It's the largest purchaser of health care and pharmaceutical benefits in North Carolina, and it has about the same number of people in it that work for Amazon, J.P. Morgan, and Berkshire Hathaway combined in the United States. So we continue to focus on taking advantage of our largeness. And as I said a few moments ago, a lot of these issues are pretty simple, but they're not always easy to tackle.
Yep. The simple ones that never seem to be. All right. Perfect. Thanks so much. Also, you mentioned some things about steerage and surprise billing. I know you mentioned you had been talking to some of your the people on your plans about getting hit with surprise bills.
Yes.
Did you ever meet one who seems especially irate and is willing to talk to a reporter? If you wouldn't mind sending them my way, that's something that I'm increasingly interested in.
Well, I would say that, and we attempt not to be political on this, anything we do at the Treasurer's Office, but if you watch the Democratic presidential debates, which I do, during every debate that I've seen, there's been at least 2 presidential candidates who have uttered and said emphatically that surprise medical billing and billing associated with healthcare costs are the single biggest proportion of personal bankruptcies. So I would say that outside of the state health plan, that it'd be very easy if you look at people who are filing for bankruptcy because of amounts of money they owe to a hospital in North Carolina. I think it'd be very easy for you to track down the situation that you just described.
A good point. Thank you.
Thank you.
Perfect. All right. Thanks so much. I hope you have a good. How's the leg?
Yeah, the leg was in May. The arm is healing, it's doing well. My preacher has said that I should be thankful for this broken arm because of what could have happened, and so I appreciate starting with my family and wife and staff here at the Treasurer's Office for being so accommodating. I've made every meeting that I was supposed to make within 24 hours of when this happened, and I've made every meeting physically that I was supposed to be in within 6 days of it happening. So
Good for you.
Anybody,
I hope it heals fast.
yeah, anybody who's had this happen, you pray for a couple things. And that one is that you don't need surgery, and that was just determined about a week or so ago that they weren't going to re-break it, which is a very positive thing. And and you also think about how important your arms are.
Oh yeah, don't I know?
And I will say this, and I hope it doesn't come across to me ever comparing myself to Bob Dole, but over the last 6 weeks, all I've thought about is the fact that for 65 years he has not been able to button his own shirt.
Yeah.
And so when I think about folks like him, not to mention his salute to Bush 41 recently, where he stood himself up out of the wheelchair, it makes my broken arm, as painful as it is and as restless as it is and as frustrating as it is, it pales in comparison to what he and others have made in sacrifices to this country.
Yeah. A good way to look at it. Well, I hope it heals fast. Thank you again for taking the time to do these.
Merry Christmas.